Welcome everyone to the daily Volatility Box report for August 13th, 2019. We are TOSindicators.com, home of the Volatility Box. To get the evening started, we'll start by quoting one of our favorite traders and someone who's considered to be one of the greatest traders of all time, Jesse Livermore. He said, "After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It was never my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight." And that's exactly what we did today. If you take a look at the trades that set up in the volatility box, there were none. We alerted our traders within the first hour of the market open that our trading plan called for us to sit on our hands today and to protect yesterday's gains. We sat back, we observed this price action. We made notes with the volatility to improve our volatility model to encompass today's activity. And we also worked on something that's a bit of a surprise. Over the weekend, we released our version of the V-score. A lot of you have, I think, been exposed to this. Some people call it the Z-score VWAP. Some people call it the distance from the Z-score distance between the VWAP. There's quite a few different versions on the web. It's been around for quite some time. But we released our version of it over the weekend, which sort of blew our inboxes up with a lot of feature requests for this. I think the one that was most common was a scan. And so we used the extra time today to build some scans for the V-score that we'll release for free in an email tomorrow morning. If you'd like to just visit our website to download them, they'll also be up there by tomorrow. All right, with that, let's dive into charts. Let's start by looking at the S&P futures. We'll approach this the way we approach using the volatility box every single day. We look at the first 30 minutes of the market open, and we look to see whether or not on the aggressive model, which is plotted here, we've breached either side of the entry lines. As you can see, we very clearly have here, and that's our signal to switch on over to the conservative volatility box. Once we switch on over, we repeat the same exact process. We look to see in the first 30 minutes whether or not we've breached either side of the entry lines. If we have, then that's our signal to sit on our hands and protect our gains from yesterday and observe price action unfolding because we are now in greater than usual volatility. As you can see, the trades did work out today had you taken them. However, our rules are there to essentially protect us from the times when they don't. If you remember the past few weeks, trying to short something like this in front of what seemed like a freight train would have been a big mistake and you would have been stopped out instantly. So while our rules may have cost us this trade today, or cost us in the sense of we were missing out, we had to sit on the sidelines, we had to watch this trade set up and be bummed when it took place and we weren't part of it, that's okay because we have to remind ourselves of the times in the previous weeks, the multiple times rather, where we would have lost a lot more than we would have gained, and ultimately that's what our trading plan does. It helps us stay to be consistent, disciplined traders and to keep winning over time consistently instead of losing on days where you shouldn't be losing. So with that, let's using the same conservative models, we'll browse through the rest of the markets because we breached on all of them. And so looking at the NASDAQ futures next, you'll see once again, we breached through them and we had the same sort of story. We had another setup right here that did end up working. And our rules kept us out of this trade and kept us on the sidelines. Once again, a bummer. You'll notice this to be a consistent theme today, but that's okay. Remember, our trading plan is there for a reason. It's there to protect us. And let's actually follow it, and let's be disciplined traders. Okay, cycling through the Dow futures. Once again, we blew through the volatility box in the first 30 minutes of the market open. You'll see we very clearly breached both entry lines, and that was our signal to not trade this market for the rest of the day and sit on our sidelines. The last market that's left is the Russell futures. And a very similar story here. We draw our line in the first 30 minutes of the market open, and we look to see whether or not we breached it. Once again, the Russell futures blew past it, not giving us really any edge for the rest of the day. And so with that, the volatility box today gave us 0 entries on all of the markets that we care to look at. However, as a result, we did get some time to work on this V-score scan, which should be in your inbox tomorrow morning, or you can visit our website at TOSindicators.com to download it. It should be in the indicators section. All right, thank you, and I hope you have a good night. Let's see you tomorrow for another day of exciting trading activity.